The global economic outlook has clearly deteriorated in recent weeks. At the start of the year, the US economy appeared to be healthy, with consumer and corporate fundamentals robust, and the labor market in good shape. Other parts of the global economy were either showing signs of stronger growth, for instance, Canada, Europe, and Japan, or passing the point of maximum weakness, as seen in China. The US decision to launch a trade war and implement tariffs on imported goods at rates unseen for nearly a century has significantly changed this outlook for the worse. I'm Michael Sager. Welcome to the spring edition of Perspectives. Although hard data on labor market conditions and spending have yet to materially worsen, survey data of economic conditions, for instance, consumer and business confidence, have deteriorated markedly, and uncertainty has spiked to levels rarely seen before. These data are indicative of a weakening growth outlook as well as a temporary increase in inflation. Despite significant economic headwinds and elevated uncertainty, we continue to expect the global economy to avoid recession in the next 12 months. It is, though, a relatively close call, with the next moves in trade policy likely to be particularly impactful. Ironically, the outlook for growth has deteriorated most in the US, where the negative impact of waging a trade war on all fronts will be compounded by tighter immigration controls and perhaps fiscal policy tightening. For Canada, our outlook encompasses an initial negative shock to economic activity until a revised trade agreement is reached with the US. After that, we expect a muted rebound in growth driven by additional Bank of Canada rate cuts and targeted fiscal stimulus. Lower oil prices also represent a tailwind to consumer spending that will be helpful to growth in Canada as well as most other economies. We now expect little growth in the Eurozone in the next few months, but similar to Canada, some improvement to follow, supported by monetary policy, fiscal support, lower oil prices, and tariff relief. And despite dramatic tariff headlines, we expect limited further downside to our view on Chinese growth, which was already quite subdued, partly in anticipation that China would bear the brunt of US tariffs. The Chinese government is expected to provide additional policy stimulus to cushion the impact of tariffs on manufacturers, to support tech investment, and to trigger a recovery in domestic spending. Inflation is expected to rise in coming months because of higher tariffs. This increase will be temporary, but will likely keep key central banks, including the Bank of Canada and the US Federal Reserve, on the sidelines for a while. Ultimately, the negative growth impact of tariffs will dominate, drawing central banks back into rate-cutting mode. The US dollar began 2025 as the market darling. A strong consensus expected further US equity outperformance and a pro-growth Trump policy agenda to drive the currency higher. That outlook has changed. A policy focus on tariffs and fiscal tightening, a negative shift in growth expectations, and an unpredictable policy environment have all combined to undermine the outlook for the US dollar, which has weakened sharply in recent months. The Canadian dollar has benefited and now has scope to strengthen further if Canada's growth outlook gradually brightens, as we expect. Elevated uncertainty suggests that markets will remain volatile for an extended period. Volatility doesn't imply markets only go down. It means they go both up and down, often sharply, in a pattern that keeps repeating. Volatility tends to smooth out over longer periods of time, with history showing that asset markets do overcome significant shocks. In just the last 5 years, markets have been buffeted by COVID-19, decades-high rates of inflation, and rising interest rates. Investors who weathered these challenges fared well, In times like these, it's important for investors to stay calm and focused on long-term investment objectives in the context of a well-diversified portfolio. For the full Spring Perspectives report, visit the CIBC Asset Management Insights Hub.